Howdy, folks. Welcome back to the StockCharts TV studio here in a cloudy Redmond, Washington. But we're back for our monthly special that we love to do. We've got my good friend David Keller here in the studio. This is 10 charts, 10 stocks, 10 funds, 10 things that you got to watch for the month of November. I cannot believe that we are in the month of November. It's ridiculous. I'm pretty sure it's still the summer, although the weather outside says it's not, so I guess I'm wrong. But excited to sit down with Mr. Dave Keller here in the studio. Be back to rock with you guys here as we review the 10 names that you got to watch for the month of November. Dave, how you been? How you doing?
I'm good. Good
to have you.
Handling new all-time highs, I guess, as best as we can.
Yeah. So we're going to get into our names, but as we like to do, obviously we got to touch on market conditions, right?
Yep.
We are just a shout away from 7,000 on the S&P. It's pretty wild to see what's happened off the lows here.
Yeah.
I'm told, by many sources that you feel great about this market. You love everything that's happening. You're really just purely optimistic. And you have no complaints at all. Is that
no? I don't see anything not to like.
I've been lied to. I don't know what's going on.
I mean, just a couple things. Since you brought it up, right?
Yeah.
Market's moving high, right? So, the one thing that is absolutely good about this market is the fact that it keeps going up.
It does.
As a trend follower, that has to, I think, be the most important thing, right? Prices is the most important factor. Price is king. But there are a bunch of other things we can use to validate whether the strength in price is kind of worthy of our optimism or not.
Yeah.
And the problem I have right now is the market is making new highs on weaker momentum.
Yeah.
Right. The RSI is kind of trending lower.
Right.
The market's making new highs on weaker breadth, and we've seen that with the Hindenburg-Omen firing recently.
Yep.
With a lot of deterioration in breadth conditions, we're seeing the market move higher on weaker volume.
Yeah.
Because we've had some big distribution days in the last week. The reason I would say why the market remains so strong is the strength of those leadership names, right?
Yeah.
Semiconductor kind of mega cap growth stocks. We'll see what happens this week, but last week was, I would argue, not an overwhelmingly positive week.
Yeah.
You had the Metas of the world that gapped down big time after earnings misses, but the stocks that did gap higher, like Alphabet, like Apple and others, they didn't
Amazon.
blow out higher. They actually gapped higher and then kind of sold off into the end of the week. So it was more of a whimpering into the weekend. I didn't see a lot of eager buyers willing to pay more for a lot of those stocks. I saw sort of the opposite.
Yeah.
So I think the challenge to this market, if there's weakness, if that's the beginning of a period of distribution, that's where indexes can go down very, very quickly. That's how a waterfall decline happens, is the previous leadership struggles.
Yeah.
Big open question now that earnings are behind us, except for NVIDIA, which is still reporting a couple weeks out.
Yeah, we still got a little bit ahead, but
it's
a funky market. It just keeps chugging along, and there's so many. We've been saying this now for the last couple of months. Every time we touch on market conditions before this special, we say, we got a lot of things that we're pointing to that are cracks here in the surface, but the market just keeps chugging higher. And it's one of those markets that, as good as it looks, when you log into your brokerage account, because the numbers keep going up, it feels terrible. It doesn't feel good. It's one of those weird sort of perplexing situations where the market's incredibly strong and you don't actually feel that good about it in a lot of cases.
So and I would
concerning.
No, it is. And I will tell you, I was looking at the numbers at the end of last week. In the last month, technology was the only sector that outperformed, right? So you have one sector outperforming and the other 10 underperform.
Right.
Depending, last week I think consumer discretionary managed to be positive after Amazon and Tesla did okay. But most of the market, as defined by the sectors, are underperforming. Most of them are lagging behind. So it really is sort of the haves and then a huge number of have-nots.
Yeah.
And so the problem is, for a portfolio, is unless you just own the mega cap kind of semiconductor trade, if you own anything else, you're probably struggling in some way. And so it's easy to struggle in this kind of environment because diversifying away from a small number of names has not paid off.
Right. And even if you're sitting in the major indexes, let's say you just own SPY, you're feeling great, but on one hand, on one hand, but on the other hand, you're going, well, now I'm getting nervous because every day when the market goes high, it's like, well, it's got to end, it's got to end, it's got to end. We hear that from a lot of people that just get more and more nervous the higher that the market goes.
So the sentiment is key, and so I would say at this point it's very much the FOMO, particularly in the AI trade, right? So it's the fear of missing out. The way a market often tops is the FOMO turns into what I probably call FOLE, right? The fear of losing everything. And it doesn't. It's not just like a fear of missing out, and then we're fine and kind of comfortable for a while. That fear will still be there. It's just whether we're afraid of the market going up or going down, and like that's the pivot that like the Hindenburg omen is meant to identify. Is we're near that point where the fear is going to shift to fear of losing out, and then that's when you start unwinding positions, and that just accelerates it. So it definitely feels like we're on borrowed time. Having said that, the S&P keeps making higher highs and higher lows. This is one of those times where I'm very thankful I'm a technical analyst and a technically oriented investor because you follow the trend is up. And if you stick with charts where that's working, you're doing just fine right now.
Yeah. There are lots of times when people like to criticize moving averages. I think this is one of the times when moving averages are unbelievably important.
So valuable.
Because it gives you some of the context for these small moves, lower, or some of the bigger moves lower. It shows you that trend. Moving averages at a time like this, I think, are absolutely crucial. As basic of a tool as it is, I think they are king right now, in addition to price.
Basic is not bad.
Basic is not bad. All right, my friend, let's jump over to our 10 names to watch, 10 charts to watch for the month of November. I'm going to put you in the hot seat. You are up first.
Okay.
Take it away with your first pick. What do you got?
I'm going to start with an aggressive consumer staples play. So my goal was just given the fact that a lot of these AI names have worked so well, my goal was to not do anything in that space and just look for opportunities elsewhere.
Okay.
Because I feel like if that trade unwinds in any way, capital is going to try to find a home. And so I'm trying to find charts that look a little more constructive, maybe a little less extended, a little earlier on. So a couple of the charts that I'm going to highlight are kind of pullback plays. Stocks that have actually shown a bit of weakness here recently, but are still overall, I would argue, in a constructive frame of reference. Celsius, the weekly chart, which we'll look at in a minute, is where you can see this dramatic rotation from a distribution phase in 2024. Celsius actually bottomed out in February. The market itself, the S&P and the NASDAQ, bottomed out a little later in April. But by then, Celsius had already rallied, broken back above its 200-day moving average for the first time in 8 or 9 months, continued higher. And what I like about the chart now is we keep making progress to the upside. We keep making higher highs and higher lows. It's recently pulled back to the 50-day moving average. It's done that exact same thing in September, in August, a couple times in May, and that's when buyers have come in. The momentum overall has remained fairly constructive. So right now, pulling back to moving average support, RSI sitting above 40. This seems like one of those times where if the long-term trend is going to continue, this is about the time where I would probably expect a short-term reversal to the upside. So I like the price configuration. I like the momentum. The weekly chart shows that big rotation. I mean, this is a stock that had done incredibly well going into the beginning of 2024, had sold off quite a bit in the second half of last year. And then through the course of this year has actually just been kind of a slow and steady gainer. So I like a chart like this as long as we keep making higher highs and higher lows. I think the daily chart kind of has a built-in approach to it using the indicators that you see. So we can see the 50-day moving average. This is where I'd probably take an initial position if I'm playing the name because we're pulling back to short-term support. But I think below there you have support around 50.51, which was the swing low from September. Overall, it seems like limited downside for the potential to ride the next leg higher on the stock. So, and I like the fact that it's outside of technology. So I'm looking for ideas outside of that space where probably a lot of people are over concentrated here.
These are always those interesting names where, I mean, it's technically a consumer staple. That's where we bucket it. But, I mean, I don't know that anyone needs energy drinks as a staple of their daily diet.
Debatable, okay? So it depends on who you ask. But you're right.
It's kind of that offensive discretionary corner of staples.
Yes.
This is a great chart. This is like classic stage analysis, right? Weinstein, this thing has clearly gone through the stages, and I would say is in a really nice stage 2 uptrend.
Yep.
This is great. That's a great chart. It's a great pick.
There we go.
I like that name.
Starting with a classic uptrend phase.
Classic uptrend phase.
All right, where are you at
What's
first?
love about those? My first pick, I'm going to give a little bit of context to this, and it's kind of funny context because of the ticker symbol. So the context I want to throw at you here is PIC. Now this is Global Metals and Mining Producers. This is an ETF, and this is a 5-year weekly chart, okay? We can even zoom this out to a 7.5-year weekly chart. We get a little bit more context here. We can see the size of this consolidation phase, the size of this range, right? Yep. This thing has been drifting sideways for years, since basically middle of 2021, maybe kind of even early, spring of 2021. This thing has been doing absolutely nothing other than consolidating. Finally kind of starting to break out, finally starting to work. This is a really, really interesting space. This was a fund that caught my eye. So I started kind of digging into it a little bit more. I think this has gone a little bit too far, so I didn't want to make my first pick. What I did want to make my first pick, though, is a space kind of within there that is doing some great things. Definitely a space I think that's worth watching right now. A scooter leader, 97.5. This is URNM. This is uranium mining. We're looking, again, at a 5-year weekly chart to give you a little bit of context. We can see that this has made the breakout and is now actually trending higher. Really nice relative strength on this over the longer term weekly. If we drill down into the daily chart, I would put this kind of in the same category as what you just did with Celsius. I would say this is kind of a trend play. You play a little bit of a pullback here. I want to see this unwind just a little bit, maybe get down to test the 50 again. But moving averages here, all in the right order, outperforming the market overall. It's in a space that's working. I think there's just a lot to like about this space, about uranium mining right now. Obviously, a really interesting story, especially globally and with kind of shifts in energy and policies there and everything. Yeah. So a really, really interesting space, but just technically, a breakout. It's starting to trend higher. It's been working incredibly well off the April lows. We can see the outperformance off those April lows. Just a really, really steady climb higher. So I'm looking at this as kind of a pullback opportunity. Buy into that name and let it ride. So kind of a somewhat similar to how you're approaching Celsius there, I would say.
Yeah.
Yeah.
This is a really interesting chart. Full disclosure, I don't own this. I do own NLR, which is a uranium and nuclear ETF, so kind of in that similar space.
Yeah.
And these alternate energy ETFs, a number of them look quite constructive here.
Yeah.
I'm curious, what with that lower high here, how does that play into your approach here? Is that a don't worry about it until it gets more magnified, or does that affect how you would take a position? How do you do that?
It's an excellent question.
Yeah.
I look at this first high as a complete, total, almost, I guess you can't really say blow off, but I mean, look at the acceleration there into those highs. I look at that as a pretty extended, overzealous buying kind of phase.
Yeah.
So the fact that we're still kind of consolidating within this range, and the fact that we came down, we bounced off the 50-day, everything is rising, we're back above the 20-day.
Yeah.
I think it's interesting that is technically a lower high. I don't think it concerns me too much, given a couple of other factors, and just given how kind of extended that move up was.
Yep.
So I'm not too worried about it. It is something that I would definitely kind of have on the checklist of things to be watching, though.
Yep.
But I think the sort of broader structure of that range, if you kind of draw some shapes around it, the broader structure of that range, I think, is what I'm more interested in.
Yeah, I agree.
Especially if you're thinking about kind of a pullback opportunity, right? You want it to sort of consolidate a little bit, digest some of those gains.
Charts like this, I think, are super helpful. Setting an alert at that previous high. So if you take a position, that's like a great validation of, okay, if this plays out well, the chart's going to tell me I'm right if this happens. And so setting an alert on that is a great way of just validating, all right, the follow-through's there. Yeah. And then maybe it's an opportunity down the road, too.
And a quick good opportunity to talk about kind of, why I think candlesticks are important. This isn't exactly a doji, but there's clear indecision in this bar right there, right on the 13th. Yep. And so the fact that you've got this kind of indecision candle is what I like to look for. And then you blew through that, and then you came back and you gave it all away. I sort of look through some of that price action and say, okay, well, the true supply and demand dynamics that you really want to think about are right here. It's kind of more on that indecision candle that I like to look for. Yeah. So the fact that we did close above that gives me a little bit more confidence. We're below it today, bouncing off the 20, hopefully, but that's a really good question. How you handle that? Yeah, I like to ask that. Yep. All right, pick number 2.
Pick number 2, I'm going to financials.
Financials.
I'm going to do Bank of America. BAC.
Okay, I've heard of that.
I mean, the money center banks are looking pretty constructive here. Yeah. And when you think about where we're seeing strength, I mean, in a number of places, you've highlighted one with alternative energy. Outside of technology, that's where you're seeing it. But that's almost kind of that same play, looking for big energy requirements of AI and all of that. Yeah. Other two areas where we're seeing a lot of strength, industrials, particularly like aerospace defense kind of charts, and then financials. And that's where I think you're seeing a lot of really kind of classic breakouts, classic uptrends. I think the chart of B of A is an encouraging one because you've had a number of kind of pauses in the trend on the way up. Back here in July, we had kind of this classic bull flag pattern where the stock's in a nice uptrend. We have a little parallel decline of lower highs and lower lows. We break out above that pattern there in August. Just a classic continuation pattern saying we're gonna keep on going. We then make new highs. We pull back to that same breakout level and the 50-day, which is a nice resumption of the uptrend. So we had a couple pullbacks to the 50-day. They've all resolved to the upside. And then most recently, we just kind of cleared this level. And so one of the scans I've often mentioned, one of the scans I run are new 3-month highs. And it's just so helpful, I think, to know the names and the groups that are able to sort of continue and break out just over a short-term time frame. And so that popped up last week as we cleared the highs from September and October. And so now I think we're making new highs. We're moving averages are in the correct order. The momentum is strong but not excessive. For me, it kind of checks the boxes of a nice, healthy uptrend that I'm going to assume innocent until proven guilty. Only thing that concerns me on this chart, which is actually common with a lot of the banks here, the ones that are breaking out are doing it on weaker momentum. So I think one of the things we saw about a month ago with a lot of those like semiconductor names and others, they were breaking out on weaker momentum. That all resolved. They ended up having stronger momentum as more buying power kind of came in. So I think that would be a nice way of validating the breakout here, would be an improvement in momentum here in the coming weeks. But for now, I'm inclined to assume that that's a strong trend, continue to show strength there.
Yeah. Little bit of relative strength, little bit of outperformance, but not a whole lot. Is that a factor for you? How do you think about that?
Yeah, so what's happening is, relative strength is arguably the most important thing we can look at because it helps you understand, helps you get away from just the bubble of looking at one chart and thinking about how this relates to all other ones.
Context.
However, I would say relative strength, you have to think of it with a bit of an asterisk because the benchmarks are being dominated by the semiconductor names. They have and the AI trade, they have a huge weight. So something that's kind of breaking out is looking a lot like the S&P, but it's just there aren't as many names doing that right now.
Yeah.
Relative strength isn't an equal weighted measure, right? I mean, so maybe looking versus like an equal weighted S&P might help to figure that.
Yeah.
But I would say relative strength, particularly on names that are breaking up, probably looks less awesome than you want it to.
Yeah.
And that's why it's because of the over concentration in the benchmark. So probably not as much of a concern now as with other times in the cycle when weaker relative strength would be a big problem.
Yeah.
There just aren't a lot of things showing strong relative strength outside of those AI names right now.
Yeah, that's a good answer.
Yeah.
All right.
Your second.
My second pick. We're kind of sticking with financials-ish, I guess. New financials. I'm pulling up Bitcoin.
Okay.
Really interesting to watch right now. So I'm going to specifically do this through the ETF lens. So I'm doing this through IBIT.
Yeah.
Really interesting. This is the full history of IBIT here. It hasn't been around that long, so this is a 2-year chart. It's a 2-year weekly, though. And I like the 2-year weekly look on Bitcoin because it filters out a little bit of the noise. And when you do that, there's a lot of people talking about how ugly Bitcoin looks right now. I think when you pull up this chart of IBIT, this looks like a fantastic chart. Again, in the lens of one to watch for the month of November, this is clearly one to watch for the month of November to me. You've had this breakout, you've pulled back, we're sitting on a long-term average. So this red line here, the other moving averages that I have on this chart, on this longer-term weekly, don't even exist yet because we don't have enough history. So we're basically sitting right on the 200-day. This is a 40-week moving average, so it's effectively a 200-day moving average. There's a lot to like here. I want to see this find some buyers. I want to see us step in and start to send this thing higher off of these levels. But I think this is a really, really interesting time to watch for support and resistance dynamics to come into play here for Bitcoin. If we drill down into a daily, that gets a little bit more clear. There we can see that 200-day moving average. We can see how we've really bottomed off of this kind of, in this case, it's not going to translate exactly to Bitcoin values, but in the case of the ETF, that kind of 58, 59 level for IBIT here, we've really bounced off of this quite a lot. So this has been an area where we've found support here for this fund. I think that we're going to bounce here. I don't see Bitcoin really breaking here. I think it's chopping around. It's consolidating sideways. I think it's going to find some buyers here, especially with the 200-day coming into play, like it did actually, 2 weeks ago. It's a really interesting time to be watching IBIT right now, I think, especially with how negative some of the commentary around Bitcoin has been. That's the interesting dichotomy here is I'm looking at these charts going, I don't get it. This is actually looking pretty constructive, and there's so much negativity around Bitcoin. Some of the other major cryptos, Ethereum, I think looks quite a lot worse.
Yeah.
So maybe that's driving a little bit more of this commentary. But I think this is a really, really interesting time to be watching IBIT.
It's interesting. A couple of thoughts. I mean, number one, you're right. It's a lot of the altcoins that had huge challenges here recently. So it's like Bitcoin is probably the strongest of all of them, which arguably has been the case for a while now. So I don't think that's much of a surprise. But a lot of people that do own Bitcoin also own a lot of other things.
Exactly. They're feeling that pain.
They're feeling the pain elsewhere, and they're probably then associating it, kind of projecting on Bitcoin a little bit.
Yeah.
It is interesting though, right? As a looking at the structure of the chart back in April, we had a very similar kind of pullback. We hit the 200-day moving average. That was pretty much the time to get in.
Yeah.
As we bounced off of there, so it's setting up in a very similar kind of setup there. And all the ETFs are like that.
That was kind of a similar, breakout, retest, bounce
yes.
type of deal with the 200-day coming into play. So that's a great thing to bring up. If we can print something similar to what we saw in April, this obviously wasn't quite as long of a range and did have quite a drawdown. But it's an interesting time to be watching it. All right, so we're moving on to your third pick of the day. What do you got, Mr. David Keller?
All right, so I'm going into healthcare now, which we haven't talked about yet.
Okay.
Biotech, which has come up in previous discussions because there are areas of biotech that have looked quite good.
Yeah.
INCY is the one I just saw pushing higher again this week. So I had actually selected Regeneron, REGN. This is an attempt to do what I call technical diversification. If you find your portfolio, all the charts look identical, I get a little nervous because what that usually means is you are playing one particular thing. You're picking one theme, you're picking one vibe, and when that vibe dissipates, your portfolio is probably going to struggle. So one of the things I've learned is make sure we have different patterns represented. If you have a bunch of extended charts, find some things that are a little earlier on, just starting to break out. And that's a good way to sort of just keep things fresh and make sure you're layering into new ideas.
Yeah.
Regeneron might be one of those. I would argue it's sort of in this transition from clear distribution, right? In the fourth quarter of last year, first half of this year, really accelerated into a low in June. Again, while the major benchmarks all bottomed out in April, Regeneron actually made a new low in June, early June, gapped lower to do it.
Big volume.
From there, started to rotate higher. And, kind of a nice consolidation. The momentum was very negative. And now we've finally broken above resistance. And just in the last week, we've broken above the 200-day moving average, which usually for me, if it's below the 200-day, I'm generally going to avoid it. And I look for things that are just breaking out. So that gap higher about a week ago, pretty good. The question is, does it hold that gap? This is an earnings name this week. So there's a risk to kind of owning it through, today's announcement. But overall, I'm playing this as a technical breakout, pushing above 600, which is where we cleared all the highs for the last 6 months. I think pretty encouraging. We're finally pushing into a positive range with the RSI. So the way I approach something like this, after we've gapped higher, if you do take a position, I look at that gap, that breakout, and the low of that gap day as a really important support level. So kind of that 600, 605 range is the 200-day moving average. It's the breakouts from before. It's the lower end of that breakout day from last week. And so I think it's setting up as a pretty good potential run. So putting a little bit at risk now for the opportunity to play that next big leg higher seems like an appropriate risk given the structure that we're at here. And if it can get through earnings in a positive way, this is a stock that has plenty of upside if you look to the left. A lot of room to run before you get anywhere near previous highs, which a lot of names can't have that, can't say that same thing.
Yeah, that's a big pop above the 200.
Yeah.
I got an important question for you, but before we do that, this is a fantastic time to pause and remind all of you viewers that we are both using some advanced tools here on the StockCharts platform that you got to be a StockCharts member to take advantage of. So both of us are flipping through chart lists that we've created right now to save all of these different charts, all the names that we're following. Both of us have been using these little tabs on the left side. We call those style buttons. They allow you to take chart templates, save all the indicators, the settings, all that stuff to these little buttons on the left side of your charts. Makes it incredibly easy to flip through different things. And one of the things that you just mentioned was earnings coming up. We're both using the full quote, which is a feature on the SharpCharts platform, where you can actually turn on that kind of top level of your charts for more data. You can see things like earnings dates, PE values, scooter values, market cap, all that right at the top of your chart. So reminder, you got to be a StockCharts member to trade and invest and analyze charts the way that we're currently doing it right now here on the show. So visit StockCharts.com, sign up for that free trial if you haven't already. Now, my important question for you is, biotech is always a tough one for me.
Yes.
Because the individual names are so subject to just wackiness. I've always felt that semiconductors is a little bit like that, but not nearly the way that biotech is.
Yep.
So what's interesting is I almost picked biotech as my first pick.
Yeah.
I decided not to. I kind of thought that you might, but I was going to do it through the ETF layer. So I was going to pick something like BBH or XBI.
Yes.
Did you look at those as part of this, or was it straight to the individual names like Regeneron?
No, for sure, right? So if you look at the chart of IBB, that's the one I often use. That's the iShares biotech. I mean, they're all just kind of in these nice, consistent uptrends.
Yeah.
And I think that shows the strength that you're seeing in this space elsewhere, right? So there are a lot of names that are in much stronger, more consistent uptrends. So having exposure to biotech, given the strength of the trend, I think makes a ton of sense as a trend follower. This was more of an attempt, an explicit attempt to say, all right, which biotech names are not overextended?
Yeah.
You know, just again to kind of diversify pattern-wise. And so Regeneron in the space earlier on in the breakout, hopefully, just starting to emerge from a base.
Yeah.
But there are, I mean, biotech as a group, you're right.
It's starting to work.
It's starting to really work. The danger with biotech is just the binary outcomes, right? Something gets approved and it shoots up, something doesn't, it gets dropped. And I think that's a risk you have to be willing to take.
Yeah.
For me, that's less of a don't put it in your portfolio kind of risk. It's more about position sizing and thinking, all right, I'm going to put this much of my portfolio at risk because there's a binary outcome, but if it works, it's going to have a pretty good payout. And that's how I think you address that with how you allocate to an idea like that.
Yeah. That's a great answer.
Good charts, though.
Definitely good charts.
Yeah.
Speaking of good charts, I think this might be my favorite chart that I have in my list. We'll see if you've got anything that I like more. Okay. Last month you did. This is sticking with the healthcare space. Eli Lilly, LLY. Yeah. I'm starting with the long-term chart, and I'm starting with the specific price level. I like to mark up my charts with these horizontal lines. You guys probably know that. I know Dave does too. So this is kind of my line to watch. You could go a little bit higher here. I'm going to hover over this candle. This is a weekly chart, longer term weekly. So 906 would kind of be my other level that I'd be watching really closely here on Eli Lilly. But look at this consolidation within a fantastically gorgeous, beautiful long-term uptrend. Again, this is a 5-year weekly chart. Outperforming the market finally after a couple years of underperformance, consolidating within that uptrend. But a long-term outperformer. I mean, this is a name that has crushed the market over the last 5 years. Not just by a little bit. This has crushed the market over the last 5 years. And a huge name too. It's not like this is some tiny little, that's not an M next to that 800. That's not $1 million. This is an $805 billion company that's crushed the market. I love the way this is setting up for this month in particular. So if we drill down into the daily. Again, remember we said 906, kind of 880 to 906, I think is kind of our level. Looks a lot worse on the daily. This is why I'm bringing up those chart template tabs over on the left side of the screen. You just saw me use it, so here's the the 5-year weekly. Here's the shorter term daily chart. This is why those are so important because it gives you the power to flip through these different time frames kind of on the fly. If I was running a scan and this came up on the daily, I probably would ignore it. But when I look at that thing on the weekly, when I see that broader consolidation, definitely a name to watch for this month, and I think a name that's just absolutely setting up beautifully. I want to see more from this on the daily. I mean, I want to see that relative strength really start to come in. We're seeing a big pickup in this thing. Just reported earnings as well, so we are through earnings. I really like to see that. I don't like to have earnings in front of me with a name like this in particular, so definitely like to see us get through that. But I mean, it's a choppy chart on the daily. It's almost funny to even bring this up. What I really like about this is just this weekly chart. This is a thing of beauty. When you step back, you think about the longer term moves, longer term trend. Lot to like on the long term.
This is the daily chart, super choppy, super gappy. There's like a bunch of gaps that have happened here, and so it's easy to sort of get turned away. You're right. When in doubt, zoom out. If you look at the weekly chart, it puts this into context, and that's this is one of those charts where the moment I see this on the daily chart, you almost automatically go to the weekly because it's like, all right,
what's happening?
This is weird. This is not trending. Exactly. It's a choppy consolidation. What's the context? And the moment you zoom out, you see, okay, this is a pretty consistent uptrend. It's gone through a long consolidation phase, but now you're seeing signs that it's exiting that. And I think that's what, in this sort of chart, you're waiting for that catalyst that we're sort of emerging from that. If you draw a trend line off of the major highs for the last 12 months, we're kind of breaking out here.
Yeah.
And so it helps you understand what that consolidation really means. That's a good chart, and it's just starting to look pretty impressive here.
Yeah. It's definitely one to watch, I think, for this month in particular.
Yeah.
Such a crucial moment. We need to see that breakout actually solidify. We want to see it continue to push higher through some of those levels, but definitely watching that closely.
Good chart.
Yeah. Good opportunity to mention alerts too. Set those alerts. You can actually do that right down here on the workbench. So hit that little bell icon, and you can actually set price alerts directly from the Sharp Charts page. So really, really crucial feature. I know you use that a lot.
I use that feature many times every day.
Yeah. There you go. All right, we're on to number 4.
Number 4.
What do you got?
This was a name I didn't include last month, but it was my 6th pick. I had 5 that I selected.
See, he cheats sometimes too.
But I didn't share it on the show.
Okay.
But I had a 6th one. I had a 6th one queued up, and I was like, this was, and it almost made it, and it didn't. It turns out Caterpillar has had a remarkable October. Now going into November, it's just continued. And that what interests me in this market is the fact that it really isn't only AI. There's some other pockets of the equity space looking quite good. Caterpillar is one of those that's just kind of a nice sneaky uptrend that's just kind of continued.
Yeah.
What I like about the chart of Caterpillar and the setup going into our discussion today is back here like in August and September, had just beautiful kind of sideways, what we call a time correction. Mm-hmm. So, markets can correct in one of two ways. They can have a big, steep price correction, which is usually a very short period of time, kind of a sudden pullback. Buyers come in. This is more of a time correction, right? We're not going down. We're just going sideways for a while, kind of an equilibrium. And the signal is when we break above there. So Caterpillar above 440 in mid-September, kind of a nice signal that the uptrend was continuing. Then we've just been in this nice, beautiful pattern of higher highs and higher lows. The moving averages are all spreading out, all in good shape. Last week, we gapped higher. This is on earnings. We gapped higher. For now, we're sort of remaining in the range of that breakout day. So I would say the asterisk on this idea is kind of what I alluded to in our introductory comments about sort of those mega cap growth names, right? The risk to this market is stocks gap higher on earnings. There just aren't buyers willing to come in and pay even more. They feel like things are too expensive, and that's where an eventual top kind of comes out. So the risk here is this is what we call an exhaustion gap, that last gap higher before we rotate lower, which is why I'm keeping a pretty close eye on the low from that gap, keeping an eye on the 21-day EMA, which is around 530. So you got a little bit of room for this thing to sort of bounce around a little bit. But again, with charts that have worked to the degree that this has, I'm inclined to assume that trend is going to continue, given the strong trend characteristics, given the moving average configuration, given the momentum, and given the relative strength. For me, it kind of checks the boxes for now.
Yeah. You know what I like about this? This might be one that you got to print and you got to put it up on the wall as a reminder. It's like a lessons learned chart. Yeah. The RSI, we hear this from so many people. Yeah. Oh, the RSI is overbought, so you could never buy this name. Yeah. Look at how much time this is spent in overbought territory, and it keeps going up. It's a great reminder. Say it with me. Overbought.
Overbought means up a lot.
Thank you. Thank you.
No, and
this is a great reminder.
And even when it becomes overbought, that's the kicker, right? I mean, the moment it becomes overbought is usually the beginning of this big accumulation phase. So it's a very good thing, particularly when something's consolidating. A big move higher on stronger momentum is often a sign that there's a real, sort of upswell of optimism for the name. A great example of that.
And the dynamics there too, pulling back out of overbought territory within that consolidation range, like you're talking about, the sort of time correction, but staying largely above 50. I mean, barely dipping below 50 at all. This is a really, really good. We might have to put this in chart school as a how RSI can help
good kind of case study and how to think about RSI and the phases of momentum for sure.
Yeah, that's a great chart.
All right, your fourth pick.
All right, I'm going to financials. You and I are going to bounce back and forth.
We really are. We're on the same page.
Jeez.
Okay.
I'm going with Stifel, SF. A little bit of a smaller name, a little bit different. We're not big banks here, but a chart that just looks fantastic. Made a breakout there in 24. Really nice breakout out of the the weakness that we saw coming out of the COVID era, going into 22 and 23. Held up pretty nicely actually. Made that breakout, came all the way back down to test that. Again, this is a longer-term weekly. This is a 5-year weekly. Came all the way back down to test that breakout and bounced in the April lows and is now breaking out again. This is a chart that just looks really, really good. It's really, really good on the weekly. I like the look of this on the weekly. I like it, I think, a little bit more on the daily. It's a chart that looks great on the daily. There we go. You can almost barely even tell that it changed because there we got the next breakout here. Really, really nice, just kind of straightforward support and resistance. Draw those horizontal lines. I like what's happening on this. It's made its way through earnings as well, so we've gotten through that. Had a nice reaction to earnings. It's breaking out. It's holding those moving averages. They're all in the right order. I want to see the relative strength get a little bit better on this. I want to see it continue to outperform. But again, I think like you said, the market has been so incredibly strong and so heavily dominated by those mega cap tech names. If it's outperforming at all, I think that's fine. So I really like the dynamics there. Momentum looks great. There's not a lot to pick apart on this chart. It's just a clean and simple breakout. I like that you can draw those horizontal lines. This is an interesting one too, because you can talk about how dividend adjustment affects this chart. So we could come down here and look at this with dividends turned off. Really easy to do that now here on Sharp Charts. All you do is uncheck that little box. So the breakout level gets a little bit closer to where we're trading right now when you take the dividends off. Dividends, if you leave them on, it kind of gives you an early breakout way to play those. So really, really interesting here when we take the dividends out of the picture. The breakout is kind of even closer to where we are now. So got to watch it, but a really nice chart breaking out.
It's a good setup here, and this is one of those actionable moments, right? A lot of charts we can find, they've already had a really good run. You wonder, this is one that feels like it's just sort of on the edge of it.
Yeah.
But what I also like about this one is the chart also provides a really clear kind of sense of risk, right? If you look at this consolidation phase we're coming out of, if it would fail, you kind of have a sense of the downside potential, which would still kind of remain in that
within
structure.
That range.
Yeah.
I mean, if you want to be really conservative with it, you could probably use. God, now I got to point out another feature. Make sure that you have this thing turned on. This is the crosshairs. Fantastic feature on the Sharp Charts page. Gives you those crosshairs, vertical and horizontal. Lets you measure things though. So yeah, if you wanted to be a little bit more conservative with this, I mean, you could play it like down to the 50-day or something. That's only a 3% stop.
Yeah.
You could play this all the way through that kind of recent range. That'd be closer to a 9-10% stop.
Yep.
But you got a couple of different ways to play this there, and it's pretty easy to define when you've got such a clear breakout. That's what I love about trading those patterns. Yeah.
Financial setting up. A couple of these names are
There's a
set
bunch
up
of them
pretty well. Okay, I like
We're
it.
on to your fifth pick of the day.
Okay.
Last one.
So this one, this one's a little different for me. I generally like breakouts. I like your SF pick. Those are the charts I do. I'm going to pitch Disney here. I do own Disney.
I've also heard of Disney.
I bet. I do own Disney. It's a long-term holding. And I like the fact that it is pulled back to about the point where if this chart's going to work, it's kind of right about there.
Yeah.
And so sometimes you find charts that are just starting to break out. They're just showing strength. This is one that's actually been showing quite a bit of weakness for the last quarter. So it made a new high around 125 at the end of June. In the third quarter, it really started to sell off. It's really continued kind of consolidating here in September and October, but it's starting to find support right at the 200-day moving average. And the reason why this popped up, I was scanning for stocks that had pulled back to the 200-day moving average, which on the scanning engine, you can kind of work through different ways of finding that.
Yep.
Look through a group of charts, and this one felt like, all right, I like charts that you have a clear kind of risk reward. You have a good framework. So the 200-day moving average is literally the lows that we've hit out through the month of October. It's right around 109, 110. If I look at the April low to the June, July peak, 38.2% of the way down, that's a Fibonacci support level around 107.50. So you kind of have a cluster of levels just below the current range where that would kind of define the lower end of what I'd be comfortable with. I mean, just given the fact that it's been in a downtrend. But I also think you would have validation if we can get above the 50-day moving average, because that's where we've stalled out in August, September, and now October. So we've had a couple failed attempts to get above the 50-day. We're now pulling back to kind of the lower end of my comfort level, thinking about the structure of the chart. The momentum has not been good, so this is one where I think it's an important one to watch because I think it could be setting up for a nice breakout. So what I would need to see from the top, holding the 200-day, breaking above the 50-day moving average would signal finally a rotation, the momentum improving. So the RSI getting back above 60, which is what you saw in some of these previous breakouts where we had pullbacks, and then we have this nice rotation to the upside. All of those saw stronger momentum on that breakout, so I'd want to see that as well. And if those two things happen, the relative strength is probably going to improve a bit here. So this one I like because it's very different than a lot of other charts that I would have in a portfolio on average, but potentially setting up. And I think there's a clear kind of report card. I mean, the chart's going to tell you if it's working, and I think there's a clear set of things I would need to see.
Yeah. This is another masterclass in now it's not overbought territory and how it can drive higher. Now it's respecting moving averages. The way that this thing is following the underside of the 50-day moving average down, and now the top side of the 200-day moving average. This is crazy. And actually, if you add the 20-day in there too, it's really interesting how it's traded around its 20-day.
Yeah.
Really interesting name.
Yeah.
Disney has been a fascinating story, I think, to watch in the last. I mean, especially the last 5 years.
I mean, through COVID, I mean, the evolution of the brand and and everything, for sure.
It's almost my perfect example of when a business just goes way too far into way too many things, and then even if you have wins in one part, they're offset by losses in something else. It's like you think of what Netflix has done, and you think of how Disney has built a successful streaming business. Yeah. But it just can't get out of its way in these other areas. It's just like so over diversified into everything that it goes nowhere.
And this is an earnings name this week. They're set to report tomorrow on Tuesday. Yeah. And so the way that I would usually approach a chart like this, if I'm taking a new position, this is where I probably take like a partial position. Yeah. And then if we get the breakout, that kind of validates it and says, okay, now I want to complete that. So I think this is one where I would probably be layering into it, given upside follow through. I think that's important here.
Yeah. Interesting one to watch.
All right, your final.
My fifth and final pick is going to be Shopify. Okay. And I'm picking Shopify because technically there's a lot of interesting things going on. We are bumping up against earnings. Same thing. I don't know if it's before or after the close, but it is on Tuesday, so tomorrow. I think this is an interesting little sort of representation, I guess, of where this market is and what makes it so difficult right now for a lot of people. So again, we're doing that longer term weekly chart. I think I've actually done, is this a 7? Yeah, this is a 7.5 year weekly chart, so a little bit longer than what we've been looking at. But I wanted to do that because it shows the run up, it shows COVID, it shows the COVID highs, then it shows how absolutely huge this collapse was for a name like Shopify that was a total COVID darling. Yeah. Huge winner in the pandemic. I mean, this was a 87% collapse from all-time highs to all-time, well, not all-time lows, but to the lows in 2022. Yeah. So huge collapse. Then a total rocket ship back up, and now above. Yeah, this is at all-time highs. So trading at all-time highs. It's back to making all-time highs. This is what makes this market so hard, I think, for a lot of people, is that we're seeing the COVID highs that felt so crazy come back into play, and we've seen these huge moves off the lows. But I think people also forget that we saw these huge collapses. I mean, Shopify is a massive company that has tentacles into a lot more of the internet than people, I think, realize. So for Shopify to take an 87% hit was about as crazy as the move back up. It's such an interesting little kind of representation of what we've gone through in the last few years. This is definitely one to watch, though, for this month because we've got earnings coming up, obviously, like we said, but technically it's been incredibly strong. Last couple of reports for Shopify, I think, have also been really good. It's doing great, kind of firing on all cylinders, outperforming the market. It's making that breakout to all-time highs, which is what you want to see if you're that long-term investor. We'll see how it does with earnings tomorrow. When I look at this on the daily, though, it's just trending. It did have a period of consolidation, kind of from late 24 into, I guess you could call it into August, really. But a huge pop on earnings. I remember this was actually one that I had on my list and really wanted to take a position in, but it was right before earnings, and this thing either just flies or gets smashed. So didn't take it, but it's been doing incredibly well since that last report. Really trending well off the April lows. Moving averages all in the right order. You can see the relative strength is just a thing of beauty. RSI has almost not dipped below 50, except for basically right there at the end of September. Strong momentum. Not a lot of volume on this name, which is interesting. For how strong the move has been, volume is definitely a weak part, but a really interesting chart to watch for this month, I think.
It's a fantastic chart. Even if you look at the monthly chart, you can see the incredible run. I mean, before the chart, just the long-term evolution has been impressive from whatever 2015 or 16.
Chart. So this gives you all the history.
Yeah. So that pullback was after that huge run as the name was evolving,
right.
but now round tripping back to those previous highs.
10,000.
10,000%. This is one where the relative strength actually is holding up quite well. We've highlighted a couple of names where they're testing new highs, but the relative strength hasn't been there. This is one that actually has been performing quite well, just because the returns you're seeing off of the lows are pretty solid. And at this point, it's strong uptrend, strong moving average configuration.
And when you think about the valuation on this too, I think a lot of people would probably look at this Shopify name and say, oh, it must be massively overvalued. I mean, a PE in the high 90s is obviously crazy overvalued. Yeah. But for tech, for the space that it's in, that's not like astronomical pandemic era madness. Yeah. That's defensible. Yeah. If you're in the right space, that's a defensible valuation. Yeah. Crazy as that may sound. Really interesting chart to watch.
Yeah. High valuations. I was talking to Mary Ellen McGonigal, who we both know well. She reminded me, Bill O'Neill would often say, in a growth-led bull market, valuations always look high. Yeah. Because there's this optimism about future growth, particularly trailing earnings. I mean, it always looks like you're paying way too much, but that's what a nice uptrend is gonna look like in the growth space.
And if you remember that valuation is demand, a high valuation for stock is high demand.
People want
for
these
the
names.
Stock.
Yeah. Good chart.
Good chart. Good 10.
Yeah, I feel pretty good about these, actually. And we generally stayed away from the most overheated parts of the market in a lot of ways, which we did. I'm impressed with that.
We did.
We'll take it.
Yeah. No, I think we found some bright spots in there, despite the crazy extended market that we have here today. So viewers, thanks for rocking with us here on the show today. It's always good to be with you. Thanks for tuning in. Remember, if you haven't subscribed to the channel, we got so much content here. Folks like Dave Keller putting tons and tons of great work into StockCharts TV, also into articles on the StockCharts platform, so definitely check that out. And like I said, if you're not already a StockCharts member, you gotta be a StockCharts member. These tools that we're highlighting, these tools that we're using day in and day out, a lot of the names that we found, I'm sure, are coming from the scan engine. Yep. An incredibly powerful tool. You can put all that stuff at your fingertips if you're a StockCharts member. I just did a show last week on sample chart gallery, chart packs, and the sample scan library. So some of these things, we hear this from a lot of people. There's a lot on StockCharts. I don't know how to get started. The episode that we just did, speaking of scanning, the episode that we just did last week, breaks some of those things down. It gives you tons of samples, tons of great starters. So you can start scanning for things like Dave and I are doing, new highs, all that stuff. You don't have to write any custom scan code. You just go to that sample scan library, run those scans. You can get the same charts that we are finding here on the show today. Save them to your account, all that good stuff. But again, you got to be a StockCharts member. So visit StockCharts.com, sign up for that free trial right now. It's a great time to do it too, because we got some big sales coming up at the end of the year. Lots happening here at StockCharts in the last 2 months of the year. I want to thank my good friend Dave Keller for being here on the show. I want to thank you guys as well for tuning in. We'll be back again next month to do it for the month of December. God, it's going to be December. That's crazy. I think I'm going to go home and watch a Christmas movie tonight, though. I was thinking about that earlier today. So I'm starting the holiday season. We're getting this thing going. But we will see you back here very soon for another episode of the show. Until then, of course, keep calm and chart on, my friends.